Good day, fellow investors. We discussed the market, I gave you my prediction on what's going on, but there were many comments discussing the uncertainty, and those are the topics I also want to touch in this video to give better context to what it means to invest in this environment. And let's immediately start with a question discussing government revenue, and where I said here that if the market crashes, the government will have problems refinancing its loans. Yes, I said that if there is a recession, which can be a consequence of a market crash, then the government has less too, which leads also to debt and financing and refinancing issues where the Fed might not be able to lower rates to help the market because of this situation on the debt market, because the tax gains from the trading or the selling are not significant. By the way, if you want everything structured when it comes to investing based on research, strategy, my portfolios, my trades, where you get an email whenever I do something that might help you with your financial decision making and process of long-term compounding, then you check my research platform in the link in the description below. 21-day money-back guarantee to understand everything, the context of all these videos that we are doing, which are just itsy-bitsy pieces and not the real deal, unfortunately. So to continue on this government, when you see the world we are living in, we are in a 3% deficit, 3% growth environment, which means that government debt stays, let's say, stable to GDP. And that is the goal. But if deficits are higher and those deficits are then compounding, because you see here net interest expense of the 2019 federal budget was 9%, now it is already 14%. But this is also something very important. Total spending was 4.4 trillion. Now total spending is 7 trillion. So total spending went up significantly. And also total sources of financing 3.5 trillion and a little bit more than 5 trillion expected for this year. So this is economic growth, but mostly inflation. And this is a great comparison to see how government finances are fueled by inflation. However, if you overdo it and you take too much debt, more than GDP growth, nominal GDP growth, then that becomes an issue because the net interest, despite inflation, starts biting. And there was this comment discussing how Stephen Graham hypothesized how Trump wants to crash the market so that we can have lower rates, the Fed printing, and a recession. But I don't think that is something that holds. First, it's second level thinking, which is too much to expect from any politician. But it also doesn't change the fact, okay, you can lower interest rates and then these payments go down because it takes time for them to refinance and everything. 100 billion, 200 billion, but there is constantly new borrowing and you kill your income taxes, corporate taxes, and all those things that are related to the market and the recessions and economic activity. So it's not that straightforward, and I don't think there are long-term benefits from doing such things. Plus, if we look at GDP, it's mostly driven by consumption, and if we look at the US, the majority of everyone's wealth is in stocks and pension funds, which is again financial assets. So 60% of one's wealth is in financial assets. If financial assets crash 10, 20%, that's a huge hit to confidence, which then leads to less spending. And that's why the current environment is driven by the stock market, and it might not be easy to play around with that. Which leads to investing, and here was a comment how it's always easy to say it's a buy here, buy there, according to charts, but prediction is like to looking into glass ball, which is correct. And you can also toss a coin and say 50-50. That's right, I don't know where will the stock market go, but when it comes to this channel and what I always discuss, we can discuss fundamentals, which are much more predictable over the long term than the stock market. And if I look at the stock markets, it's completely crazy. Up 50% down, up 50% down, 4 times up, up 30% down, up again, and now again down. That's completely crazy. But this is what I can focus on. The current dividend yield of the S&P 500 is 1.34%. And that's it. Can I get to my financial goals on a 1.34% dividend yield that will likely grow 5% over the long term? 3% inflation, 2% economic growth. That's the key question. Stocks, unpredictable. The key question now is, from this moment in time, at current prices, is it a vehicle to lead you to your financial goals? That's the key question. And discussing that price, when businesses are priced to perfection, all you have to do is to introduce a little bit of uncertainty or a little bit of disturbance, as some say, missed expectations, and you get panic. That's exactly what's going on. I have discussed already, but Wall Street has been pricing this market to perfection. Earnings are expected to be at 310 in the next 24 months from the current 200. That's 50% growth in 2 years for earnings, even higher than what is here because this is operating and not real earnings. Now, I have sent myself a scheduled email for December 2026 telling me to check this. So check Wall Street predictions between now and then. If you need to ask me a question, especially related to my platform, investwithsven@gmail.com. Feel free to also send more specific questions because I can't really cater to the comments on YouTube. So much spam, so much activity. So if there is something, send me an email, please. So we'll see. That will be a video 2 years from now. So let's see how that goes. I don't think this will be 310. I think real earnings will be 250, maybe if we have no recession from the current 200. If there is a recession, it might be again 200. And now, when it comes to the stock market, let's look at the defensive stocks. For the last 6 months, 10 months, I've been saying that food stocks are in a downturn already. And there were these comments how good companies, food stocks, Berkshire, and other things that pay good dividends are holding. And also here, ADM dividends value is holding. And here, if I look at the past month while the market has been down, Archer Daniel Midlands has been doing well, but it doesn't matter where the stock goes. Don't focus on monthly, even yearly stock prices. Focus on what you are buying and where will it lead you. Will this lead you to your financial goals over the long term, and with how much certainty? Because if you focus on stock prices, the portfolio, I'm doing this, then you're completely missing the point of investing, which is that through business ownership, you go to your financial goals. And if the market doesn't reward you, the business does. And then here and there, the market rewards you, which is just a bonus in your compounding path, which is something completely opposite to crypto. Some people are saying that given the uncertainty, crypto might be a very important factor in the future, but that is still just a speculation. We do not know how will this react to future uncertainty, how will people react to future uncertainty. And if I look at the situation here over the last day, that is already 2-3% down. So you cannot call this any situation of, let's say, stability. When it goes down 20%, up 15%, that's just people gambling around, hoping that it will lead to something. Here we were talking about 500,000 Bitcoin, then someone commented here crypto winter and things like that. So this is just pure speculation there, and we cannot know. That's the problem. And if I cannot know, Then the question is, will it lead to my financial goals? To me certainly reaching my financial goals. If not, then the answer is easy. And then we come to the topic of navigating uncertainty. So we are living in an uncertain world, but here the comment is that there is hardly any reliable way for a private person to hedge against these risks. Governments might do this, that, inflation, hyperinflation, and I think that I have to disagree here. You are also benefiting from all these things that are happening. From the financial bubble that we are living in, we have all benefited over the last 15 years. New technologies, new this, new that, quality of life, we have already benefited. So yes, it is an uncertain world. And now we have to, as value investors, focus on the situation by watching the risks and then assessing the risk and reward. I have been pounding you on this channel, fixed rate mortgage, when it was free money. Now it's already a little bit different. In Europe, it's still pretty much free money, depending on the prices and the asset you are buying. But that is something that is also a process. I see a lot of people, they just look at the market, they are overwhelmed and they say it's impossible. But that's why we are here constantly reminding you of the value investing long-term life process, because it is just about doing a few smart decisions in life and everything is much easier. Whatever happens, I'm okay. I invested in the right businesses at the right price. Recession, I don't know. Trade wars, we'll be okay. We'll get rewarded from the businesses. Businesses will adapt, evolve, and then if there are the secular long-term tailwinds at the right price, you do okay. Because yes, there is uncertainty, tariffs are there, we will see what will be complete tariff war, will that pain kick back? And then the question is, how will this look like in 2 years? We have midterm elections in the US, then again presidential elections, and all these things tend to evolve fast. And the question is, okay, who will hurt more? Over the last 15 years, I can tell you one thing, no one likes pain. And that is also something that might change things in the next few months. And that's why I also told you that the situation is simply unpredictable. Ray Dalio discusses the cost of a trade war, how it is mechanics, not politics, it's mechanics, that the likely outcome is that everyone loses. That's it. The costs go up for everyone, which means less development, less investment, less technology, less trade, which lowers the level for everyone. There is no other way around it. Those are the mechanics, has been shown endless time in history. But okay, this leads to fighting between countries. So the US, Canada, and Mexico and China are now fighting instead of working together for the benefit of all. And you know that there is no winner in any war. This doesn't have to be fighting with wars, with guns, but financial, whatever, it doesn't lead to well-being, better well-being long-term. Which leads us to the topic of the lost decade. Yes, there is uncertainty, but there is always and there will always be uncertainty. The key factor is the price you are paying. Here someone is saying the lost decade has officially begun, buckle up, but Jeanette here says the crash is premature, I'm heavily invested and have been through worse. The market generally rewards those who know that ownership is everything. I agree. But I think it's all about price. And when we look at the current situation in the bubble, David here says, I can't believe how many people love Brookfield. So Brookfield is the private equity bubble that we discussed. And the world we are living in, here it's a great comment. What the wise man does at the beginning, the fool does at the end. Going back to this comment, yes, the stock market was great at a certain price. At another price, it can be the same stock market, but it is not so great anymore. And with this line, I will leave you to just think, settle down, look for value investments, which means I can't lose much, upside, uncertain, but will it lead you to your financial goals? And that's it. And check my research platform where you have 10 and more vehicles that might lead you to your financial goals with a higher degree of certainty. That's it. Thanks for watching. I'll see you in the next video.